Hello and welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari, and with me in the studio is Amit Ranjan. It's a Monday morning and a start of a brand new week. The markets, they have opened in the red, although Nifty is currently hovering around that 22,000 mark. The broader markets, they are looking shaky as well. But the big question, I think, really is, will the ghost of last week continue to haunt investors, or will the market reverse course after a 1 week shakeout? We'll talk about that in greater detail. Let's look at how the global markets are placed. Amit.
Thank you, Suyash. Good morning. They closed in the red. Dow Jones was in the negative at 0.49%. S&P 500 was in the negative at 0.65%. Nasdaq Composite was in the negative at 0.96%. It is the tech stocks which were down after the inflation data. So Nvidia was down, Apple was down, but Tesla and General Electric were up. Coming to the European markets, the stock 600 closed in the negative at 0.32%. Hang Seng, Chinese stocks climbed as data is pointing towards an economic improvement after the targets that the Chinese government has set. The Hang Seng was in the positive this morning at 0.21%. Nikkei is in the positive this morning at 2.15%.
All right, and overall the sentiment is looking rather weak. Remember, there are a lot of events that the market will react to this week. We have several central banks that will come out with their monetary policy decisions. The biggest, of course, is the US Federal Reserve, which will come out with its decision on Thursday. I mean, the broader expectation, I think every one of us is expecting, the Federal Reserve to maintain the interest rates, but I mean the policy, as far as the commentary goes, I think the market will be keenly paying eye and close attention to what Mr. Powell has to say. If there is any switch to a more hawkish stance, the market will react negatively. But as things are stand, no one pretty much is expecting a rate cut this time around. The first rate cut could come probably somewhere around the June policy meet. That's what the broad expectation is. Around 65 to 70% of the market participants are expecting that. Then we also have the Bank of Japan policy meet, and the expectation over there is that they could go for an interest rate hike, and this will be the first interest rate hike in 17 years. And there is something called carry trade. We'll talk about it with greater detail about that, but let's look at how the markets are doing, because currently we are around that 22,000 zones. In fact, Nifty is trading with a cut this morning, as is Sensex. The broader markets, they were showing some signs of reversal near that end of the week. In Thursday and Friday's trade, especially the small caps, ended higher in both sessions, whereas the other segments of the market were trading in the red. We are we have reversed courses in the broader markets. They have turned positive. So, the volatility is there in the markets. But I think the bigger question is, of course, will that shakeout that we saw last week, will that continue? To answer that and more, let's also bring on board Mrs. Afni Bhatt of JM Financial. Thank you for joining us here on News9, Avni. I mean, we are coming off one of the worst weeks for Indian markets. The mid and the small caps, they got all the attention, but Nifty, it gave away 2% as well. But I mean, looking at Friday's session, I think there were a couple of silver linings worth noting. One, Nifty did not make a new low. It held above 21,900. It continues to do so this morning as well. And we closed above 22,000, although we have broken below it this morning. And second, the overall breadth, that improved significantly. I mean, the advanced decline ratio midweek was about 1:9. By Friday, we were again close to that 1:1 ratio. I mean, does that indicate that the bottom may be around the corner?
Good morning, Suyash, and a very good morning to all the viewers as well. So Nifty, say suppose if today also if it holds on to 21,900 level, I think it will be a triple bottom formed on the downside. Give another 50 points for the swings. 21,850 is also an important moving average support level and a weekly support level which should hold on. So as long as on the downside 21,850 level is held on to, I think there will be attempts of pullback up to around 22,200. On the upside, 22,200 has become a major crucial resistance zone which was the earlier support. And until and unless it crosses 22,200 level on the upside, Nifty will not be out of the woods. So for Nifty to move higher, or even to stabilize and a close about 22,200 is important. So as of now, it's stuck in a range of 21,900, taking support around those levels. And selling pressure emerges not even at 22,200. In fact, it's 22,050. So from a short term, very, very short term trading perspective, 22,050 holds crucial. Once it crosses that, even for intraday, it could head towards around 22,150 to 200. So a long trade could be, initiated once it crosses 22,050 with a stop loss of 21,950 and target of 22,200. But overall, I think Nifty is consolidating currently in the range of 21,900 on the downside and 22,200 on the upside. Either of this break of either of this level will decide the trend for the next week and coming few days.
All right, and what's your view on Bank Nifty? Because I mean, overall it was relatively resilient compared to other segments of the market, but on a 6-day losing streak, it was holding on above 46,500, but we have broken below that this morning. Was that a critical make or break level for Bank Nifty, ma'am?
So for Bank Nifty, the pain point was at 47,000, and a break of 47,000 itself has, created shorts. Attracted fresh shorts in the system. On the downside, 46,250 is one level that I would very keenly watch on. In case that level breaks, then we're heading towards 45,950 on the downside. And on the upside, again, for Bank Nifty also, since 47,000 was the pain point, until and unless that level is crossed again on closing basis, I don't think we are looking at any major upsides immediately. So Bank Nifty, as of now, again, it has come into pressure and looks slightly weaker than Nifty, because there are sectors like IT, select FMCG stocks that are supporting Nifty. But Bank Nifty, even the private banks as well as the PSU banks are coming down. So it's under pressure. 46,250 is a crucial level to watch out for. In case it breaks, the downside could extend further.
Good morning, Avni. I'll drive your attention to Compton Greaves Consumer Electricals Limited. Now, they have been granted a patent for their invention of the linear node tubular lighting system. Now, this patent has been granted for 20 years, retrospectively from August 2020. But when we look at the stock, whether it is last 5 days, last 1 month or last 1 year, it has been in the negative. Today itself, it is in the negative. It's down almost 0.96%. Do you think this patent will reverse the fortunes of this company, or is it going to be floundering for some more time?
Good morning, Ashish. So this stock, as you mentioned, it's in a downtrend only, and in fact, in spite of such a positive news, it has given a fresh breakdown below 277 level today. So technically, it looks pretty weak, and I think it is heading towards around 252 levels. For any kind of pullback up to around, say, 277 to 278, the selling pressure will resume. So no point taking up a trade in a stock which, in spite of positive news, it's not showing any signs of any green shoots.
All right, and Avni, I mean, overall the market was weak last week, but IT stocks did well. Nifty IT gained about 1% in a falling market, but one stock stood out for me, and that is L&T Technology Services. The stock, surged overall 2% for the week, but two big green candles on Thursday and Friday, and there was a fundamental trigger. Of course, the company won first of its kind 800 crore contract from the Maharashtra State Cyber Department. But again, getting back to the stock, it had been in that phase of correction, had been correcting for the past 4-5 weeks. But that two strong bullish candles, green candles, does that negate the previous downtrend?
Yes, Suyash, 100%. The stock on a daily chart, it has given the two green candles, which have given a breakout about the short-term moving averages. So the stock had been trading below the short-term moving averages, and on Friday, it managed to give a breakout above that. Also on weekly basis, if you see, it has formed a bullish engulfing pattern, which is a very encouraging sign. So any kind of retracements that we see after a breakout, usually the stocks retrace back to their breakout levels. So it may probably come down to around 5375 to 5380 area. But overall, it's out of the woods, and I think the stock should perform well. On the upside, it should test somewhere around 5600 levels, and the support base has been formed at 5256.
All right, Avni, and what are your picks for the day today for our investors?
So today it's a mixed bag of longs and shorts. I think HDFC Life around 625 to 630 was a breakout level. It gave a close above that level, and also above the previous swing low of 625. So around 625 to 630 levels, HDFC Life becomes a good buy. It should head towards 650 to 670 on the upside, and 615 can be kept as a stop loss. The second stock is Bharti Airtel. Again, on the long side, it has given a weekly breakout about 1200 and 1220. Even futures positions have seen an OI addition of around 2%, and major unwinding has been seen at 1200 call and 1220 calls, and open interest has been added at 1200 puts. So support base has been forming. It should head towards 1270 to 1300 in a very short term. Stop loss can be capped at 1195. The third stock which I'm looking at is from the defensive sector, which is Cipla. So Cipla has been managing to hold on towards 1470, 1475 area, support area. And the good part is that in spite of a move below 1500, there has been no unwinding seen in 1500 puts for the current series. It shows the confidence in the traders for the stock. And I think in the short term, it should head towards around 1515 and 1540 on the upside. 1440 can be kept as a stop loss. The two stocks on the short side are Metropolis. So Metropolis has given a breakdown, and any up move up to around 1600, 1610 can be utilized as a selling opportunity. On the downside, it should be heading towards 1500. 1640 can be kept as a stop loss. And next is Bank of Baroda. The PSU banks have been under pressure, and but Bank of Baroda is a conditional call. You have to sell it only if it goes below 252 level, which would be a breakdown. Now, future positions have seen a short addition of around 1%, and unwinding has been seen at 250 put. But technically, only below 252, it becomes a sell trade for a target of 240 and 235, and stop loss will be kept at 258. So let it give a breakdown below 252, then a short can be initiated in this particular stock.
All right, those are the trading picks from Avni Bhatt. 3 stock calls on the long side, HDFC Life, Cipla and Bharti Airtel, and 2 trades on the short side, Metropolis Healthcare and Bank of Baroda. Thank you, ma'am. Always a pleasure speaking with you. Thank you for giving us time on News9. But with that, let's slip into a break. On the other side, Gaurang Shah of Geojit Financial Services joins us.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience. Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
The lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News9 Plus. Download now.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more streaming on News9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching First Stick here on News9, and the markets, they are off the day's low. Nifty as we speak is back above 22,000. It's almost flattish for the day now. Sensex is also moving along the showing similar trend. It's also trading on a flattish note. The broader markets, they have recovered from the day's low, about flattish currently. Nifty mid cap is down just 0.05% at 46,664, and the small cap index, it has recovered significantly from its day's lows. But that remains the weakest segment of the market. It's down 0.2% this morning at 14,815. India VIX, that has risen above 14 levels. We are at currently 14.32, and that's on India VIX as of 10 a.m. this morning. It's up 4.5%. But with that, to get his views on the market, let's also bring on board Mr. Gaurang Shah of Geojit Financial Services. Thank you for joining us here on News9, Gaurang. Great seeing you as always. The first round of MF stress test is done. At least what I am reading, most fund houses have reported, numbers that are in line with what the expectations were. Nothing to be concerned about. But what's your assessment of the situation, sir? Is there anything for us to stress about?
Thank you, Suyash, and morning to all of you also. I think it's more of statements and counter statements, and of course, if there is any further regulatory related clarification coming in from the regulator, then I think again you might see a little bit of more pressure. Having said that, Suyash, I think there still needs to be a little bit of more sanity in terms of valuation in the mid cap, small cap, micro cap universe. If you just reflect upon the third quarter earnings and the stock price, you can, very clearly make out the difference. So there has to be a little bit of more cleansing, as we call it, needs to be done. When it will come, I have no idea, to be very honest. But there are sectorially certain ideas which we at Geojit also believe warrants second glance when it comes to long-term investment. But like I said, because the valuation being rich, start at current levels, possibly you get dips or profit booking, you can add to it. But, time and again, Suyash, we've been discussing on this show with you that it's always prudent to stick to large cap, buy few shares, but buy quality shares. If you get stuck into some unknown name, then history is witness, Suyash. You don't find the way to the exit door. That's been the case even in the past. So I don't think anybody has to complain, and more so, Suyash, when anybody is going into small cap, mid cap, micro cap, whether it is a fund or a direct investment through equity market, I think that person, he or she, has to clearly understand the risk involved.
All right, sir. They clearly have to understand the risk involved, but the markets, they have corrected significantly. The broader markets I'm talking about, 4.5%. The mid cap index corrected last week, 5.5% or so. The small cap index. You mentioned that the valuation discomfort is still there. If you could help us understand, hypothetically, how much more would you like the market to fall before you would advise making fresh entries?
Well, I honestly, how much more I would like, I think it's very difficult to put in terms of numbers. But yeah, maybe about 3-4%. more. And more importantly, like I said, from the regulator, if there is going to be any further regulatory related announcement, and if the mutual funds have to revisit their strategy, then possibly you might have a little bit more deeper correction. But let's hope that more blood is not on the street, because it's finally the small retail investor who is at the receiving end. So maybe a little bit of more correction, 4-5% more in terms of excess valuation. I'm not saying overall, Suyash, where there is excess valuation. And there are reasons, Suyash. I don't think, there are, this is not a recommendation. I'm just making an observation that I made last week. Jet Airways is trading at 45 rupees or 50 rupees. Please give me a justification why it has to trade over there. JP Associate was flying around a name which warranted a lot of attention. For the love of God, where on earth? Some people were talking about R Power and R Capital and God knows RCom. When this kind of euphoria comes into the market, I think it's time to fasten your seatbelts.
Good morning, Gaurang. Now, the government has come up with its new electric vehicles policy, according to which import duty concessions will be given to companies who are setting up their manufacturing units in India with a minimum investment of $500 million. These companies will be allowed to import up to 8,000 cars per year at the lower import duty levels of 15%. Earlier, they used to be between 70 to 100% depending on the size and the cost of the engine. The lower import duty will be valid for vehicles costing above $35,000. Now, we hope that apart from Tesla, there are other companies that queue up. This has come despite the advice from Mahindra and Tata earlier on, advising government not to reduce import duties for the level playing field. Now, when we look at the stocks of the local Indian auto companies, the last 5 days they have all been in the negative, though they're all in the positive today. Now, how do you see the fortunes of the local auto majors after this policy? And do you see international majors listing into Indian stock markets here on?
Good morning to you also. So, it is not the first time. Earlier also, we had some very niche and marquee names coming into India. They tried to survive, but then finally they had to shut the shop. The latest one was, I think, Ford. Before that, you had Chevrolet shutting shop. Before that, you had a couple of other names, Korean-based companies who had come to India, tried to establish but had disappeared in thin air. And this is just the announcement. Let's wait and watch. Let's not rush into this. These names that we are talking about in terms of established Indian players like M&M, Tata Motors and the Marutis of the world, they cannot just disappear overnight. And more so, I think with the government's focus in making India a manufacturing hub, and from number 3 to possibly number 1 or number 2 position in the next couple of years, exporting hub Bharat is going to become, in case if the goals that have been set aside by the government for the auto sector is achieved. So there is no denying. And it is wise to from the government side, because if some smart aleck wants to manufacture in China and sell in India, you can fool somebody else, not India. Let me be very honest. And price tag will also matter. It's always a sensitive point as far as Indian customers are concerned. And remember one thing, Amit, earlier we used to ask question, 1 liter pe kitna deti hai? Now the question is, in case if there is an accident, how safe are the passengers and the driver inside? So that's the shift that has happened over a period of time. I don't think it's going to be a major threat. And wait for elections are yet to happen. Government is yet to come and take its chair. Portfolios are yet to get allocated. Final budget, let's hope so, as announced by the finance minister and prime minister, comes through once the government is placed. Over there, you will definitely have something positive for the domestic manufacturing companies also.
Gaurang, since the reduction has been as much as from 70 or 100% to 15%, where do you see the maximum disruption happening? Will it be in passenger vehicles or the heavy loader vehicles or the two-wheelers?
I think it's going to be PVs first by default because all these names that are going to come into India are, historically, four-wheeler passenger vehicle manufacturing companies. The disruption in the two-wheeler or maybe, commercial vehicle, multi-axle, high tonnage, it's going to be a thing of the past because that is yet work in progress. So the first one will be, of course, the four-wheeler passenger. And over there also, I don't think it's going to be entry level or mid. I think it's going to be high end.
All right, and Gaurang, before we let you go, Bank of Japan, I mean, that is expected to end its negative interest rates when it comes out with its policy decision tomorrow, that's Tuesday. And this will be, by the way, the first rate hike from Japan in 17 years. Now, of course, this would mean a stronger yen against the USD, but this could also mess up with something called a carry trade. Now, I'll just explain it briefly. It is a carry trade is when investors borrow money from low interest rate regimes like Japan and invest in high interest rate regimes like India to profit from the interest rate differential. Gaurang, coming to you, I mean, I know you don't care much about what foreign institutional investors do. And I mean, but another reason for them to stay on the sidelines now, isn't it?
So I think firstly we should send a bouquet to the chief. I think it's been after a great time. Yeah, so I think a minor disruption could be there, Suyash, no denying. But I don't think it's going to be any significant.
All right, minor disruption, nothing significant. That's the word coming in from Gaurang Shah. Great insights from you as always, sir. Thank you for joining us here on News9.
Thank you.
But before wrapping things up, let's look at how the markets are doing because Nifty, remember, it was hovering around that 22,000 mark. 21,900 remains a key support for us and we are holding above that as we speak. In fact, we are above 22,000. So, very near 22,000, just about 15 points shy of it. And this is as of 10:10 a.m. this morning, but the markets are super volatile. 22,000 of course is a key. One would like the markets to close above that on an intraday basis for further upside, but I think 21,900, as Avni also pointed out, 21,900 is where we have found support in the last couple of sessions, actually the last 3 sessions, Wednesday, Thursday and Friday. So if we take support from there once again, it would be a triple bottom support, so that could perhaps mean that it's a medium term at least or a near term sort of a support area. Right now we are defending that. We are closing around that 22,000 mark and that's on Nifty, still struggling with it. As you can see on your screen, that's as of 10:10 a.m. this morning. Sensex on the other hand is also trading with a cut of 0.2% and it's very just below the 72,500 mark. The broader markets, I mean, they were staging some bit of a recovery, but again the losses are getting wider there. The small cap space, remember, on Thursday and Friday it was able to recover a lot of what was lost in the last 2-3 weeks, but it looks like the market is still not convinced that the shakeout is over. Gaurang said that 2 to 3% he would want the small caps to fall from here on to provide that valuation comfort. There is still discomfort as far as the valuations are concerned in the broader markets. The small cap index as we speak is down 0.55% at 14,765 levels. It's at its lowest levels in nearly 12-15 months. The mid cap index, the mid cap 100 index is also down 0.44%. It's at 46,479. And India VIX, that's also climbing higher. It's up almost 5% now, and this is as of 10:10 a.m. this morning, trading in at 14.36 levels. But a couple of good things that I would want to mention is that Nifty Bank, remember, earlier in the show we were talking about Nifty Bank struggling this morning. It had been relatively insulated in this 2-3 week sort of a correction that we had witnessed in the market. Still fell, but compared to your headliners and your small and mid caps, it did fairly well. And 46,500 is where the market was seeing a very crucial support for the index, and 46,500 is something we have claimed once again. We had broken below 46,400 levels in this morning trade. It was down somewhere 0.4%, but currently we are back above it. In fact, moving higher for 46,500 573 is where we are at currently, and it's down about 0.05%. Auto stocks, they are doing fairly well this morning, one of the best performing segments of the market. It's up 0.7%. Another sector is media, it's up over 1%, and metals, I mean, after that correction, that deep correction that we saw last week, and a lot of these metal names, especially the steel stocks, we are witnessing some bit of a bounce back. But a couple of sectors that will remain in focus is, of course, your rate sensitive sectors, because remember, 14 central banks will come out with its monetary policy decision, and with that US will also come out with its policy decision. That's on Thursday. Bank of Japan comes out tomorrow. So a busy week for investors around the world. But on that note, let's end this bulletin. Thank you for watching.